Compass Mining is your trusted partner in Bitcoin mining. Whether you're investing in one machine or thousands, our customizable solutions are tailored to meet your needs. We are your experts in Bitcoin mining, offering a platform where individuals and businesses can purchase hardware, host machines, and access a range of ancillary Bitcoin mining services. We also specialize in large-scale site development and data center operations. Discover more at compassmining.io and see how we can power your success today. Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. An exciting episode for you today with CleanSpark and IREN coming out with April production results, along with Q1 earnings from Cipher Mining. We're going to be discussing all this and more. Before we get into it though, take a second, smash the like button guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below what you thought about today's results and your top pick in the Bitcoin mining sector currently. With that being said, let's get into today's video. Okay guys, midday during trading Tuesday here. We're looking at the board right now, Anthony. Miners appear to be making somewhat of a recovery, a bit of a mixed day. Bitcoin holding in that $94,000 range or band we've talked about throughout the last few weeks here, but kind of a tossed up day in terms of the miner performance right now.
Yeah, Bitcoin price still playing in this band, this 93, 95 band. Most of the day. Mining stocks, bit of a mixed bag. You know, probably most of them are in green, but there's a few in red. Bitcoin price probably needs to get a bit higher for them to turn to green, but we're still very early into the trading day, so maybe a turnaround in the second part of the day.
Yeah, time will tell on that one. Gryphon caught my attention here, up double digits today, Anthony. We've talked about some of these smaller miners. Soluna has made quite a run in the past few weeks as well. You've got a table here showing year-to-date, quarter-to-date, month-to-date performance of the miners. Some of these smaller miners really, I guess, surprising to the upside here.
Yeah, Gryphon's having a good run. As I say, up to date, quite nicely, probably the best performing miner today. 1 month change at the moment for Gryphon is 179%, so by far the standout miner for the month change. Soluna at 72%, and then you're really down to the sort of like in the 20s for the likes of Corp, Scientific, and Bitdeer, both at 27%. Actually, Cipher having a good monthly position at 38% up. But if we go to the year to date, we stressed this on the last podcast, pretty much, you know, a sea of red. And when you look at the average, I think yesterday was 37%. We're down to 35%. So that gap's closing. A couple of weeks ago, we were over 50%. I think it's 52% an average there. So we're seeing that come back down as the miners slowly perform better. Bitcoin price heading towards maybe 100,000, maybe even getting closer to getting that all-time high again. And but the miners, although correlated, aren't moving as quickly as we'd like with the Bitcoin price. But a couple of good miners there. Like you say, two of the smaller miners, you know, head and shoulders above in the last month. But when you zoom out and look at the longer-term position, Soluna is down 62% year to date. Actually, year to date, Gryphon is the best performing miner, only down 3%. So they're having a better turnaround in this parts of the year. So well done to them.
Yeah, we'll come on to a few of those picks again as we talk about the Miner Madness competition towards the end of the presentation today, Anthony. But before we do, we wanted to talk about some of the bigger, heavier hitters in the sector. An exciting podcast today. We've got production results out from CleanSpark and IREN, along with Q1 earnings from Cipher. So nice to compare and contrast those to what we saw and heard from Jason on the program yesterday in terms of Riot's Q1 numbers. Now, we'll start with IREN, Anthony. This is April production update. They gave some nice commentary, an update on the tariff situation, which we can discuss. Only miner so far to improve in terms of Bitcoin mined month over month, despite the shorter duration of the month itself and the increased difficulty. So overall, a strong showing for IREN.
Yeah, good monthly performance, but very big increase in operational hash rate. They grew their operational hash rate from 30.3 exahash at the end of March to 36.6 exahash. That's 6.3 during the month of April alone. That's more hash rate than Hive Digital have actually got operating at the moment. So that's literally taking on a new miner just in the month of April. That increase gave them a 9% increase month over month in terms of Bitcoin mining. Yesterday we talked about the impact of the halving and the day lost in mining was about 10%. They've still managed to achieve a 9% increase, 21% increase in operational hash rate. Installed hash rate went from 37 to 40. They announced that midway through April. They're on track to get to 50 exahash by the end of June, which is the target that they set quite a few months ago. And it looks very much like in the last 2 months, if they can put 6.6 exahash on in a month, I'm assuming the last 10 exahash in 2 months should be close enough to achieve that. They've got the best mining efficiency of all the North American public miners at 15. And if you look at their update today in terms of energy cost, the power cost per Bitcoin, 24,381. That's 19% increase on March there. But they're still saying that they're averaging, in terms of cost per kilowatt hour, around about 2.9 cents per kilowatt hour. So that's probably, in the top 2 or 3 of all the miners. We know that Cipher have about 2.7, and there's a couple of other miners around about the 3 cents, but 2.9 is a great average. Now they are on market rate, so that can change fairly quickly, but they've managed to attract some really good rates, certainly this year, and since August last year when they went away from that PPA agreement back onto market rate. They've turned the corner on that one there. That's given them a mining margin in April of 72%, a reduction of 5% on what they were achieving in March. But another standout point they actually brought out for April was they actually started to increase their AI cloud services revenue. That's now increased 25% from 1.6 million a month to 2 million a month. And they're on sort of like track now as an annualized revenue of about 28 million a year. So that's pretty good. That's giving them a hardware profit margin of 98%. We know there's not as much energy used in terms of AI cloud services as there is in Bitcoin mining. And so therefore, energy price is not as prevalent in that type of business strategy as it is in the Bitcoin mining strategy. But it's good numbers. We want to see that obviously increase because they've invested a lot of money into AI cloud services. Now, they are also looking to progress work at the Horizon 1, which is on the Childress site. So remember, they're going to get to 50 exahash, and they still had a significant amount of power there, but they're now putting that power towards HPC, and they're now having a look at a number of structures which they, under consideration for building out that 50 megawatts IT load deployment at the Childress site, as well as thinking longer term at Sweetwater, where they have 2 gigawatts of power there. So they've been working collaboratively with suppliers, also, as you mentioned earlier, to manage the tariff impacts on some of these mining machines coming through from Southeast Asia. There was a window of 90 days, so I think they've managed to benefit from that there. And we'll keep a watchful eye on news coming through from the administration as to whether tariffs are going to be applied to the likes of mining rigs coming from Southeast Asia and GPUs as well, or chips to be used to complete the GPUs. Whether they'll be part of that tariff there, because that would impact many of the miners that we discuss on a day-to-day basis.
Yeah, it certainly would. And really an interesting interview we had with Logistics Plus a few weeks back, Anthony. This is a company that specializes in importing, supply chain, warehousing, tariff mitigation. They talked to us a lot about this current tariff situation with the Trump administration. And as they understood it at the current time, ASICs and mining rigs would not be exempt from tariffs. So companies like IREN looking to take advantage of these windows and onshore their miners while they have that opportunity. Now, the other thing I wanted to pick your brain on, Anthony, we'll go a little bit off trail here. IREN starting to put out some new updates, numbers, revenue in relation to HPC AI. Obviously, Sam Tabar, Bit Digital, putting up some great numbers. However, we are finding it's very difficult to get information, quite tight-lipped from a lot of these CEOs. We heard from Jason yesterday with the Altman Salon study. He said there's a lot of market intelligence, wasn't able to share a lot of it. Hut 8 we know has something going on in terms of HPC data center. They're hesitant to talk much about it. And IREN, we're still waiting on that big announcement or big client. Why do you feel this is such a kind of secretive space? These companies are obviously in high competition for these clients. Do you think it's more difficult than they maybe initially thought to source clients, or do you think these blue chip customers just don't want any publicity as to what they're doing with their data center expansion?
It's maybe a bit of both, actually. I think a lot of it is making sure that I mean, many of the miners have talked about the interest, the conversations in terms of they're speaking to potential customers, but we're not seeing that level of detail that we saw from Core Scientific when they announced their contract with their CoreWeave, and also then subsequently increasing that contract literally on a month-by-month basis. For one, it started at 200 megawatts. It's now at 590 megawatts. They've been very transparent in that position there. But I can understand why miners want to be a little bit hesitant. There's a lot of miners, sourcing power to deliver HPC, and maybe the likes of, some of the big hyperscalers like Microsoft, like Meta, like Amazon, and others out there, are probably waiting to see, whether they can deliver on all parts and what that looks like. And also, it sounds like many of these miners are not going to be able to get that sort of advanced financing to help cover the cost of building these infrastructures, because, we're talking not just about the power side of it, but building the infrastructure as well. We're talking hundreds and hundreds of millions of dollars to deliver this. And yes, Jason raised a good point last night. Once you have a deal, you're then able to go to the market and borrow. Well, it's a bit of a catch-22 for some of the miners. If they haven't got the deals and they haven't got that funding to deliver, and funding institutions like banks won't sort of like lend money on potential of coming through. They want to see something a bit more, in writing and an agreement, a contract signed. And once contract signed, the cost of capital then becomes very much more cheaper for miners. The institutions prefer this type of a contract as opposed to raising money to buy Bitcoin mining machines. There's still a premium to be paid in terms of interest rates for that type of business unit compared to the business units within HPC.
Yeah, some good points you bring up. A bit of a chicken and an egg situation there, Anthony. You can't get the funding until you have the client, and you can't get the client until you have the funding to build out the facility. So, interesting dilemma. And you do bring up a great point with Core Scientific and the CoreWeave deal. They were extremely transparent at the start of last year, both in terms of the financial side of this and the financing, which you just talked about with CoreWeave putting in a lot of the money up front. So quite a unique dynamic seeing that one as the first deal out of the gate, and then really nothing even close to that since in the last year or year and a half, Anthony. So we'll stay tuned to see what's going on in the HPC space. One company next up that's not participating in HPC AI at this point in time is CleanSpark. So they're essentially the only pure play miner left in the game. They came out with their April production results as well, down 10% month over month. But as we talked about yesterday, Anthony, that's essentially explained based on the difficulty and shorter duration of month.
Yeah, so yeah, exactly. 10% down, we can explain that quite clearly. In terms of operational hash rate, pretty much the same as the end of March there, 40.1 compared to 40.2 exahash. Operational power remains at 915. Their efficiency improves slightly, so obviously, as they're adding, replacing miners, you're going to get improved efficiency. One thing of note for this month, though, is that they did sell a significant amount of Bitcoin, 401 0.39 Bitcoin as opposed to just 14 the previous month, and pretty much for most of the last year or so, because they've been really building that hodl up there. They've still managed to increase the hodl from 11,869 to over 12,000. So 12,101 Bitcoin. That's got a valuation at the moment of $1.14 billion. And if we look at the valuation compared to the market capitalization, it's around 50%. So again, not really given any premium for the Bitcoin hodl, because you've got to remember that CleanSpark have over 30 sites with, in terms of hash rate, 42.4 energized hash rate, which will be well over 250, heading towards 300,000 mining machines. So that will be the remainder of that market capitalization. So we're not really getting any premium like we talked about yesterday with strategy in terms of for hodl for some of these miners. Now, one thing of note is their operational performance in the month there, 15.8. And if you remember yesterday, we covered Riot's update, and they were at 15.8. And I look at IREN's, and they're at 15.8. So again, these top three miners from the start of this year, 2025, are performing in sync at the moment. So the year-to-date table is going to be really, really close. It might be that Riot just managed to hold off as they're all performing at the same level, and Riot were ahead at the end of March. So Riot may, the first 4 months of the year, hold that first position, something that wasn't used to them for the last 2 or 3 years, because we know they've had significant issues in terms of operational production at their Rockdale facility. But as Jason mentioned on the podcast yesterday, things have changed around there. They're starting to get a lot more performance from the machines there. The fact that most of their fleet now is in immersion cooling technology, and there's less requirement on maintenance, that helps them as well. But in terms of CleanSpark, another good update there. We tend to expect a good update from CleanSpark month on month there. They've got Taylor running the mining show for them, and like we've spoke about Ben Gagnon before, two really strong people in the mining sector, know all about mining machines, and can deliver good performance.
There you go. Update from CleanSpark. And I actually reached out to Rex Finance to see if he's going to be in Vegas at the CleanSpark party, Anthony, and he will be. So we may run into Rex Finance down there at Bitcoin conference in Las Vegas towards the end of the month. Now, Anthony, another question for you here. I'm going to put you on the hot seat today. Yesterday, we talked about Marathon's HODL as a percentage of market cap, nearly 100% or very close to the entire market cap of the company. Marathon at this point, very much a pure play Bitcoin miner, the largest in the sector. CleanSpark, also a large pure play Bitcoin miner, but as you can see on this table, HODL only represents about half of their market cap. So as someone who's been in the accounting space for 30 years, what does this tell you about the market's understanding of these companies and the differences maybe in the premium that the market is putting on the underlying business? To me, it would say that the Marathon business model is not as valuable or maybe not as structurally sound as CleanSpark, and therefore not getting that premium or valuation. What would you say based on this situation?
Compass Mining makes Bitcoin mining accessible to everyone. Start mining in as little as 48 hours with our turnkey hardware, online and mining directly to your Bitcoin wallet within 2 business days. Find out more at compassmining.io and get started now.
I think both companies aren't getting a premium on the actual HODL. Bear in mind, you've got to remember Marathon have a significantly bigger HODL than CleanSpark. But when you start adding in, and also Marathon have a significant amount of debt. Remember, they took out $2 billion in convertible notes to buy Bitcoin. So yes, they have Bitcoin on the balance sheet. Yes, it's valued at 100% of the market capitalization. But if you look at, once you start going into maybe from enterprise value, it shows a different picture, because you'd have to include all that debt as well. So none of these miners, we spoke about this, none of these miners are getting any premium, unlike the same as strategy. And maybe strategy, it's because it's very clear what they're trying to do. They've been very clear to follow this same process for the last 5 years. They haven't sold any Bitcoin. So, they're just really a buyer of Bitcoin and a holder of Bitcoin. So we know that marathon of sold in the past, they've tended to hodl this last sort of 18 months, build up that massive hodl that they've got there, the second largest of any public company in North America. And then you've got the likes of CleanSpark and Riot, who during the month of April started to sell some of their Bitcoin. And rightly so. You've got to pay the bills. It's another lever to use. But the market is probably looking at miners in a slightly different way. And I think Jason raised his point very well last night on the podcast. They're not following the MicroStrategy process in just being a total proxy for Bitcoin. These are mining companies. They mine Bitcoin. Some of them are now going to utilize some of that power that using towards HPC. But they're effectively mining companies, so they're a different business model to strategy, and that's probably why the market isn't giving them any sort of like premium for any of the hodls they've got. But it is concerning, because if some of these companies were bought out at their market capitalization price, they could be sold, and actually the Bitcoin we sold, the assets could be sold for a premium on the actual sale price. So it is a bit of a head scratcher for me.
Yeah, interesting discussion and great point you bring up about the debt or the convertible notes, and interesting strategy, still able to achieve that 2x NAV premium on their Bitcoin hodl, even with the debt and the convertibles on their balance sheet. But again, Anthony, we talk about the uncertainty, the fact that markets don't like uncertainty, and strategy of any company out there has specifically stated their focus and their mission here to continue to buy Bitcoin and never sell it. So interesting discussion, to say the least. Now, the final one we wanted to talk about, Cipher Mining. They just came out with Q1 results. We got some great updates on the Black Pearl site, some new images. And this one's interesting, essentially second horse out of the gate here after Riot, Anthony. We're starting to get a more clear picture of Q1 for the miners themselves.
Yeah, in terms of earnings results there, Q1, overall from a financial perspective, from an accounting perspective, using GAAP accounting, it was a loss for the company, but there were some very much positives. They made a loss of $39 million. But when you start looking at, the amount of depreciation, that was 43.5, stock compensation, 9.1 million, and also the fact that they had to incur a loss on the fair value of their Bitcoin hodl. Remember, we talked about that. The Bitcoin price dropped from 93,000 at the end of December down to 82,000 at the end of March. And that $11,000 had to be applied to the Bitcoin that these companies held during that period there. So you can see from Cipher, $20.2 million affected from there. So some of these non-cash items far more exceed that loss there. I mean, some of the positive points that came out is obviously they mined 602 Bitcoin during the course. That was an increase on the previous quarter. In terms of margin, if we look at the total revenue less the cost of their energy, which is clearly put into in their accounts there, they achieved a 69.6% margin in Q1. That's exceptional. And if you go to our live miner margin on the Power Mining Analysis website, you'll notice it's very close to that figure there. I think we've got them slightly higher, I think just over 70%. But actually, it shows you that with the data that they're providing fairly accurate data, because it's all right saying we can have energy at 2.7 cents a kilowatt hour, and that's the number I put into the formula. They're actually close to achieving that number there. So that really stands up really well there. In terms of other cash costs that they've incurred, G&A costs at 9 million, slightly less than they were in the previous quarter. So they've obviously looked at some of the costs, and some of the costs have come down. Payroll costs also came down from the previous quarter. So if you look at the cost to mine a Bitcoin for Cipher, obviously they've mined 602. But if we break that down into one Bitcoin, and look at the costs that are incurred there. We've already mentioned the 69.6% margin. G&A costs per Bitcoin, just over 14,800. Payroll expenses, 8,590 per Bitcoin. Other income stroke interest, that's a cost of about $975 per Bitcoin. So the total operating cost per Bitcoin, 24,434. That gives them a total cost in terms of cash cost to mine a Bitcoin of 49,174, and that represents 60%. So when you look at it from a cash perspective, then they're producing Bitcoin, at a 60% cost from the revenues they're receiving. So that's a really healthy margin. But obviously, we do have to mention the fact, obviously, stock compensation, depreciation, also, significant, costs, albeit they're non-cash costs. And if you were to look at the depreciation cost, that 43 million for 602 Bitcoin during that quarter, that works out at 72,000 per Bitcoin. So that's, the big reason why the whole accounts were actually loss-making for that quarter. Depreciation was a significant cost. If they hadn't had that level of depreciation, they would have turned a profit. But, they're going out there, they're buying machines, they're building infrastructure, a number of sites, and you have to obviously apply depreciation. It's the way that the accounting treatment to show that you've paid for these assets, and that's how these costs are calculated. So although from a non-cash perspective, really, really positive there. I think it's a good set of results there. Certainly, Tyler and the team will be very pleased with that performance, especially when you consider. We've gone through a halving last year, we've had difficulty, and they're still able to achieve a really good cash cost percentage in terms of margin for all their cash costs. So that's good to see.
It certainly is. And all these photos coming out of Texas, Anthony, it's getting me excited for our Texas tour. We're heading down there in November. Many of the sites we've actually covered over the last 2 days, the Riot facility in Corsicana, obviously the Cipher mining facility here, and even the IREN facility at Childress. Going to be a very interesting time going around to these different sites, looking at how this infrastructure is being constructed, the data center design. So it should be another great trip down to Texas for us, Anthony. Now, we wanted to follow up on a few pieces of news from the Luxor dashboard here. We talked about the difficulty decrease going into this cycle. We did see a decrease 3.3%, it looks like, Anthony. So slightly less than initially projected. But as you say, the further out from that difficulty adjustment, the higher the volatility is in terms of what the adjustment could be. But great to see a reduction here. You'll notice that the 4 past adjustments were all increases. Obviously, a breath of relief for the miners.
Yeah, a much wanted relief for the miners there. That extra, 3.3%, give them a bit more Bitcoin production in the first or the next 2 weeks of May, and we'll have a look closer to the date as to what the next difficulty reduction. But in general, over the last sort of couple of years, we've seen this difficulty rise significant, and we've talked about Bitcoin difficulty as effectively, like a second halving. So we have a halving every 4 years. It looks like we're having another halving every 4 years as well in terms of difficulty when you look at the rise in the global hash rate. And that's what it is. It's that, it's more machines being added to the network. And when more machines are added, the algorithm determines the block rewards quicker, and therefore every 2 weeks the adjustment has to be made to bring that back. Well, it looks like over the last couple of weeks we've seen less hash rate onto the network, maybe because Bitcoin prices pull back a little bit. And for some miners, maybe not the North American public miners, but other miners out there who just aren't able to have the efficient mining machines and maybe not able to attract the cheapest energy costs. And remember what Jason said on the podcast last night. If you can attract cheap energy, you're not as reliant on having the most efficient miners. You can have less efficient miners. And Riot, he was saying last night, they're getting very much close to 3 cents a kilowatt hour, and their efficiency is 21. So when we get we'll be looking to get IREN's results. I think they come out next week, and they've got some of the cheapest energy and the most efficient fleet. So the margins, we've just talked about margins with Cipher. Really looking forward to seeing the margins that IREN produce as well, because this will be really good. But this difficulty helps the miners. 3.3% gives them, effectively, 3.3% more Bitcoin over the next 2 weeks, and then we'll see where the difficulty ends up changing at that point in time.
Yeah, we certainly will. And as it stands now, it's projected to be an 11% increase on the next adjustment cycle, Anthony. So we'll see how long this lasts. And we actually just scheduled in Dan Roberts for their earnings interview as well, you mentioned. So that'll be a great discussion with him. Now, you talk about North American miners having access to cheap power. This is an interesting chart I've never actually looked at before on Luxor's website. Talking about the global distribution of hash rate. So you can see the United States in the dark orange there, the most saturation in terms of hash rate globally. Canada in the nice yellow color there, and surprisingly Russia, China keeping up as well. So this was just interesting, Anthony. We talk a lot about 30-40% of hash rate being in North America here. We've talked a lot about the centralization within Texas, specifically West Texas. But in the other hand here, the other side of the coin, we've also talked about other countries around the world starting to add hash rate, potentially getting into mining from the government side of things as well. And you can clearly see Bitcoin mining going on globally.
Yeah, you can see that. We don't have a lot of mining in the UK, hence the colour in the UK there. But you can see, the likes of Russia, likes of China, likes of Kazakhstan there. Also now we're seeing countries like Iran. We're hearing that they're mining Bitcoin in Iran there. If you look at Africa, I'm assuming that's probably Ethiopia, where there's mining going on there. Obviously, the largest presence of miners we know is in the US, and when we say US, predominantly in Texas, where probably 25 to 30% of the global hash rate is being mined in Texas alone at the moment. Hence that really deep red color for there. But Canada also, has a number of miners there, a number of the miners that we cover in terms of likes of Hive Digital, in terms of DMG, in terms of Bitfarms. So, and also Hut 8 has some facilities there as well. So it's obviously, an interesting map. I've not seen this map either before there, but I'd be interesting to know if we can put the numbers to some of these countries, just to sort of like get an indication from percentage, how that looks now, how it's changed maybe over the last 6 months, because certainly in the US, Texas has in the last 12 to 18 months has grown massively in terms of hash rate.
Yeah, it certainly has. And that change over time will be interesting. We may bring this one up in another few months, Anthony, and see how these numbers have shifted. The last point we wanted to touch on in terms of network metrics, forward hash rate. You can see this has now decreased. We were talking about that growth in excess of $50 last week going into May. However, you can see now sub 50 projected for the foreseeable future based on this most recent pullback in Bitcoin price.
Yeah, this is based on the Bitcoin price at the moment, and as I say, it's in that band 93, 95. If we see the Bitcoin price, get towards 100,000, get towards the all-time high of 109,000, then that curve will then, change again in an upward trajectory. But at the moment, it's just really the future is effectively uncertain, and maybe models to highlight that are a little bit more pessimistic in terms of the unknown, especially with Bitcoin price, because we just can't determine what the price is going to be tomorrow, next week, next year. So calculating the forward hash curve obviously is based on a number of factors, and I would imagine there is some risk applied to it, and hence it's showing a downstretch at the moment, but that can turn around. We saw the Bitcoin hash price over $50 recently, and we'll probably see it get back through there if the Bitcoin price gets through 100,000.
Yeah, we certainly will. Now, the next slide here, talk about Bitcoin price getting up over 100,000. The golden bull run apparently starting on May 8th, according to Lofty here, showing a nice little chart talking about some of the previous runs we've seen and stating 295 or $295,000 US by this summer. So yet again, Anthony, another large six-figure prediction going into the 2025 cycle. Now, earlier in the presentation, we mentioned the moves of some of the smaller miners, Soluna, Gryphon. You can see in the update here on Miner Madness, clearly taking the top spots, some of those more niche picks. But looking across the board, Anthony, even in light of yesterday's Sea of Red, a lot of positive momentum here. A lot of people plus 30, 40, 50, even 60%, a third of the way into Miner Madness 3.0.
Yeah, the vast majority of people are in positive territory, even, down to sort of the last sort of 10 or 15 people. I'm seeing a positive percentage at that level as well. So a much better competition in terms of miner price action than we had in the second competition that we ran, where literally everybody was at least, I think, a minimum of 20% down by the end of the 3 months. That seems to have turned around a bit. And I suppose you've got to think of the fact that when miners do drop to a level you think they're not going to get to, then really the only way from that position is higher. And obviously the timing of the third competition was the point at which the miners started to change. So we are seeing, some big turnarounds, and the leaders at the moment, really, 60, 70% increases, and the competition isn't a month old yet. So some really inspired choices there. But Gryphon Mining and Soluna, Cause is also having a mentioned Cause over the last month, having a good percentage rate there, and also the likes of Bitdeer as well. So people who have picked those companies are doing really well there. I seem to be dropping a bit further down, so Soluna maybe not helping me as much as it was previously. A bit of a red patch today, so that means other miners are catching up there, but I'm still slightly ahead in the analyst leaderboard. Maybe I won't be tomorrow. I think there's a couple of people ahead on my tail there, but it'd be good to see give someone else a bit of credit for their performance instead of me all the time.
There you go. Yeah, share the love around a little bit, Anthony, but across the board, really looking strong there. And hot off the press, actually, I was just taking a look at Twitter before we ended out the podcast. Dennis Porter coming out with a massive announcement. Strategic Bitcoin Reserve is now passed into law. We just covered the fact that the governor of Arizona vetoed this bill yesterday on the channel. That presented an opportunity. It looks like New Hampshire is going to take the lead role now with the governor signing into law a strategic Bitcoin reserve bill. And really, this representing that first domino, which we think is going to set off the rest of these states and potentially other countries around the world.
Yeah, this is good. This is good news. And yeah, we had the disappointment yesterday from Arizona. But today, New Hampshire have been the first state to do it, and so let's hope now that with this in place now, we see a number of other states getting closer to this sort of like this line where the final votes and then the deciding vote, obviously with the governors, can put it into law, and that will then hopefully give enough support to have it as a sort of nation as well, because we know that the president's very keen to have a strategic Bitcoin reserve, and he's already signed the executive order, but that's not, that can't be implemented until it's been voted through. And obviously, you're going to have some, political standoff maybe from the Democrats, who were not really totally in favor of Bitcoin during their tenure. We've seen that change around now with the Republicans taking control of both houses. So it's going to be interesting to watch this out over the next few months as we see more and more states get close to this point. But great news today, great news for our good friend Dennis Porter and Satoshi Action Fund, who obviously have been at the heart of many of these votes and educating people and obviously statespeople all the way through to get them to understand what they're voting for. So yeah, great day for Bitcoin, great day for Satoshi Action Fund.
Most definitely. We'll have to get Dennis back on the program to talk about this milestone. Final message, Katie Hobbs, Governor of Arizona. If you're watching the program, the podcast today, you were one day away from making history with that first strategic Bitcoin reserve. And unfortunately, now New Hampshire has taken that position. So either way, Anthony, we're excited that we're starting to see some legislation get pushed through. We'll continue to provide updates. Hit the like button if you're still watching, guys. Feel free to subscribe. We'll see you back here tomorrow.